You know, every once in a while, you get a week where so much happens, it feels like the ground is literally shifting beneath our feet. Well, this was one of those weeks for crypto. The whole idea of traditional finance and digital assets coming together, it stopped being a theory and it just got very, very real. So let's break down exactly what happened. So here's what we're going to cover. First, Vanguard's absolutely stunning turnaround. Then, we'll get into a super important tech upgrade for Ethereum. After that, a legendary debate between crypto and gold that you have to hear about. We'll also look at what other giants on Wall Street are saying, and then we'll wrap up by looking at the hard data, where the money is actually going. All right, first up, the big one, Vanguard. I mean, we're talking about one of the most conservative, most influential investment managers on the planet. And they just did a complete 180-degree turn on crypto. This isn't just a little bit of news, it's a seismic event. A lot of people are saying this is probably the most powerful, most positive signal for the crypto market we've seen since BlackRock jumped in and the political mood started to change. And what makes this so huge is that Vanguard wasn't just sitting on the sidelines before. No, they were actively against it. I mean, just look at how fast and how total this reversal is. Back in January 2024, they flat out refused to list Bitcoin ETFs. They even ticked existing crypto products off their platform. Now, fast forward to this week and boom. They're not just allowing Bitcoin and Ethereum ETFs, they're opening the door for XRP and Solana too. It is a complete and total surrender. And to really get why this is such a huge deal, you have to understand the sheer scale of Vanguard. They have over $11 trillion in assets under management. They are an absolute behemoth in the financial world, and their influence is just massive. And that influence trickles down to over 50 million investors who use their platform. That's 50 million people who, until now, were basically walled off from this entire asset class. Now they have the green light from one of the most trusted names in finance. The potential for new money coming in is, well, it's just enormous. So you have to ask, why the sudden change of heart? Well, according to Vanguard's own statement, it was pretty simple. Their clients demanded it. The quote says it all. Investor preferences are continuously evolving. This wasn't some top-down decision from a bunch of executives. This was them responding to overwhelming pressure from their own customers. And that is a huge sign of mainstream adoption. So at the exact same time Wall Street is opening these financial floodgates, the actual technology underneath is getting a massive upgrade to handle all this new interest. This week, Ethereum pulled off its Fusa hard fork, which is just a fancy way of saying they made a critical improvement to the network to get it ready for institutional level action. So what is this Fusa upgrade, really? Well, think of it like a huge expansion project for a major highway. The main goals are to let the network handle way more traffic and to seriously cut down the tolls or transaction costs. It's the kind of stuff you have to do if you want to go from thousands of users to millions or even billions. So what does this actually do? Well, it makes things way cheaper on what are called layer 2s, which is where most of the action happens. It also helps stabilize the fees on the main network. Plus, it increases the whole network's capacity by about 30% and makes it easier for more people to help secure everything. It's a win-win-win. Okay, that's a lot of tech talk, I get it. But why should a company like Vanguard or BlackRock care about any of this stuff? Here's why it matters. This upgrade basically tears down the technical and cost barriers for the big institutions. It makes it way easier and cheaper for them to get their hands dirty, to build financial products directly on Ethereum, instead of just buying an ETF that holds it. It's the difference between buying a share in a car company and actually getting to build the engine. All right, so beyond the big money and the big tech upgrades, there was also a huge ideological moment this week. I'm talking about the legendary debate between crypto pioneer CZ and Peter Schiff, who is probably the most famous gold bug and Bitcoin skeptic on the planet. And the whole debate came to a head in this incredible moment. CZ pulls out a 1 kilogram gold bar, hands it to Peter Schiff, and asks him a really simple question. Is this real or fake? And Schiff, he couldn't answer. The point was made right then and there. Verifying physical gold is hard. Verifying Bitcoin, anyone can do it in seconds. But CZ wasn't done. His next question hit on another key advantage of digital assets. He asked Schiff if he could just take that gold bar and walk across the border with it. And of course, the answer is no. You'd get stopped. But with Bitcoin, you can carry millions, even billions of dollars across any border in the world just by remembering 12 simple words. And then, for the knockout punch, CZ asks Schiff how much the gold bar is actually worth. And Schiff, the gold expert, he kind of fumbled. He wasn't sure of the exact price. And it just perfectly showed the difference between the clunky, old-world nature of physical gold and the super easy, transparent, global price of Bitcoin. And look, Vanguard's big move didn't happen in a vacuum. All week long, it was like a chorus of bullish voices from the very top of traditional finance, all singing the same tune.
You had Larry Fink, the CEO of BlackRock, who used this amazing analogy. He said to think of traditional finance and crypto as being on opposite sides of a river, and they're both building a bridge to meet in the middle. He sees the future as collaboration, not competition.
Then you've got the veteran Wall Street strategist Tom Lee, and he was even more blunt about it. He flat out declared that Ethereum is the future of finance, and that by 2025, we're going to see everything, stocks, bonds, real estate, get tokenized and run on the blockchain. And this wasn't all just talk about the distant future. JP Morgan, a bank that used to be a massive critic, came out and reiterated their price target for Bitcoin, $170,000 in the next 6 to 12 months. They think all the recent fear in the market is basically old news. Okay, so we've heard what the bigwigs are saying, we've seen the tech evolving, but what do the actual numbers tell us? Let's follow the money and look at the data from this past week. If you look at the money flowing into these new ETFs, it tells a really interesting story. Even though the market was a bit choppy, capital kept coming in. Bitcoin had more inflow days than outflow days. But what's really fascinating is Ethereum, which had money coming in on 4 out of the 5 trading days. That shows really strong, steady demand. And if we zoom out to the bigger economic picture, there's another major tailwind. Right now, the market is betting there's an 86% chance the Fed cuts interest rates this week. A rate cut usually makes assets like crypto more attractive, and it could just add even more fuel to this fire. So when you connect all these dots, you've got the biggest money managers in the world building on-ramps, you've got the core technology getting ready for prime time, and the economic winds are shifting in its favor, it leaves you with one big question. Are we finally watching the end of the debate about if crypto will be part of the system and the beginning of the race to figure out how and when it gets fully integrated?